This is my cheat sheet for Wednesday, February the 22nd. Alright, so I don't want to be the bearer of bad news. You know, generally, I am a fan of equities, aka stocks, and I am a huge believer long-term in the stock market. So if you have long-term strategies in place, I'm not talking to you. However, there was one thing that I saw that concerned me a little bit. Individual investors put more money into the stock market last week. In fact, over the past month, the majority of the new money coming in has not been big money, guys. It's been everyday folks pouring money back into the stock market. But the most money came in last week that we've seen in years. That's part of what's been powering these returns. And it makes sense because I've been actually sitting here for about the last week scratching my head going, boy, what gives? Because this market doesn't make sense that we're still heading north at this point. And here's where I don't mean to be a bearer of bad news. Long-term strategy in place, there's no reason that you have to run for the hills, and I'm not telling you to do that. But if you have new money, I got to tell you, I am a far more optimistic person in real estate, especially here in southeastern Florida. As we found out, five of the top 10 rebounding real estate markets in the country are in Florida, including our territory, that I am the stock market at these levels. Let me tell you why. A couple reasons. The single biggest concern I have for our economy this year, long term it's debt, but this year, it's energy prices. And I have been projecting $4 a gallon gasoline going back to December by mid-May. I am now, based upon what I'm seeing, moving that up to late April. And it could end up moving up further depending upon what goes on with Iran. This economy is in a weak recovery. I already have projected unemployment at 8.8% by the end of the year. Now, project that with compare that with the 8.3 we're at right now. In other words, what I'm saying is businesses are going to be hurt with higher energy prices. We at the consumer level are going to be hurt. We know that when we have to pay higher gas prices, we have less disposable income, which means less economic activity. So what I'm talking about with regard to putting new money into the stock market right now is that I'm very cautious at these levels. And I think that local real estate right now represents a more compelling value if you're putting new money to work than piling money into the stock market in the face of very quickly rising energy prices. Speaking of which, update from yesterday. Yesterday I mentioned that the futures market for wholesale unleaded gasoline had moved up 20 cents a gallon just in 1 week. Well, this was scary again just in 1 day. We saw another 4 cents a gallon at the wholesale level and the futures level yesterday, up to $3.24 a gallon. So that means in about 2 weeks, that's what the price is that at the wholesale level, the folks you go and buy it from the gas station are paying before taxes are added on. This is not good news. We in Florida could end up seeing, in some parts, $4 a gallon gasoline in early April at this pace. So all I'm saying is I want you to be cautious, think twice about your investments. You don't have to run for the hills in the stock market, but I'm not committing personally any new money, aside from what it goes in automatically in my 401k plan, to the stock market. I am pursuing local real estate. And reminder, if you are going to trade out of a fuel inefficient vehicle into a more fuel efficient vehicle, do it right now rather than when we do hit $4 a gallon and everybody else is trying to do that. You'll end up paying too much for a fuel efficient vehicle and you'll get killed on your trade-in. That is the cheat sheet for today. Enjoy yours. All kinds of stories about new streaming service for under $5 from Xfinity coming on my physical cheat sheet. I do want you to check the rest of that out, but enjoy your day. See you tomorrow.